Hi, everyone. Welcome to Atrium Research's YouTube channel. Atrium Research is an equity research firm based out of Toronto, which provides institutional quality research on a variety of industries from metals and mining, energy, consumer products, tech, and many more. We also write thematic research on a variety of industries and interesting themes, and all of this can be found on our website at atriumresearch.ca. Today, I have the pleasure of interviewing Jed Richardson, the CEO of Trigon Metals, which trades under the symbol TM. We initiated coverage on Trigon earlier in the year. We have a buy rating and a target price of 60 cents per share. Jed, great to have you here.
Thanks for having me on, Ben.
Yeah, so why don't you sort of take it away here? You can touch on the different updates Trigon's had over the last few months, as well as dive into today's press release in particular.
Sure. So just to catch everybody up, Trigon is now a copper mining company. We've got our main asset, the Tsumeb Mine in Namibia, in the northern part of the country, and it has been a very busy last couple of months. We started mining from our open pit, Kavango. The main Kavango pit and Kavango North in May. Here's some images from the pit. We are mining 24/7, so both day and night, and we are happily seeing some really good high-grade copper sulfide ore. We started our mill at the end of July, and as you mentioned, Ben, we produced some of our first concentrate and put out some numbers just this morning on that concentrate production. So the mill has 1,000 ton per day capacity. We ran just around 440 tons of material through the mill on Monday. We produced a concentrate of 33.5% copper con, which was a pleasant surprise for us. We were targeting a con of around 20%. For those of you who've been following the story, you'll know that we did start some production last year, and we kind of hunkered down, recapitalized, and relaunched production just earlier this month, and we are getting a far better concentrate this time around than we did last time around. And notably, we also had 79.5% recovery, and this is notable for a couple of reasons. One is we were not running our best ore. The key that we've been focused in on is maximizing our grade. We want to be running 1.2% copper through the mill. We didn't want to start commissioning with our best stuff for the risk of losing it all to tails as we were tweaking the mill. So we actually ran what I call like rescued ore. This is we use ore spotters in the pit. They were identifying areas where we were seeing some grade that in blocks that were supposed to be waste, and we were able to feed a couple thousand tons of 0.7% copper. So to get high recovery on that was a bonus, and really sets us up to hit that milestone of commercial production by the end of September, which we're measuring commercial production at being 70% capacity. We ran about 44% capacity on Monday, and we can do it high quality concentrate and high recovery.
That's great. Yeah, very exciting news. Even for ourselves at Atrium here in our valuation, we modeled 80% recoveries in 2024 after you had announced commercial production. So given it was low grade, and you're not fully optimized yet, there's probably a bit extra upside there that we're not realizing in our model, and I imagine the market isn't pricing in. And then, so with that, Jed, why don't we talk a little bit just about the valuation of the company? Um, you know, ourselves, we have a 60 cent per share target price at Atrium. That's using a DCF model. Anyone can find this information on our initiation report as well as our other research notes. But why don't you just touch a little bit about the infrastructure on site and sort of how that compares to the market cap of the company, and ultimately where you guys sort of want to be in terms of, production metrics long into the future here.
Sure. So when you talk about valuation, the key to look at is we are operating from an open pit, but this will ultimately be an underground mine. And we're already pushing forward on the dewatering. We've got our pumps in place and getting going on the underground. And as you alluded to, we have a lot of infrastructure in place. So the image that I'm showing you right now are the pumps going down the shaft. They are now in the bottom of the shaft, and we are test running those pumps, the dewatering. A bit of an unusual situation is that this was a past producer, so all of that infrastructure is in place. That head frame that you're seeing, we inherited that head frame. We've modernized it so that we can operate. We had thousands of meters, near kilometers of drill core that we inherited, and we've been using that to build out our underground resource. But we'll be doing that. We'll be working on that over the coming months as we dewater. This image here shows exactly what we're dealing with at site. So you're seeing our full production facility and the main head frame. And all of this infrastructure we inherited. We estimate over $150 million in usable infrastructure. I'd actually say it's probably more than that because we don't really give credit to the old mill. We're looking at just the underground infrastructure when we get that number. We've invested another $14 million in getting the plant up and running. And now we're going to be bringing on that underground production. So from the open pit, we're looking to average about 7 million pounds of copper per year with byproduct silver. And from the underground, in that first stage of the underground, we should have 22 million pounds of copper production annually. So a real boost coming into next year as we get underground. And this is all with a market cap of sub 40 million Canadian. So a lot happening here.
Yeah, for sure. And even the the open pit grade, it's around 1.2, I believe you're targeting, and then the underground grade, correct me if I'm wrong, is going to be around 2.6.
Exactly. Yeah.
Yeah, and then so that's where you're going to see those recoveries and whatnot boost further beyond what you're going to show us over the next, sort of 6 months to a year.
Right. So yeah, that grade is the big differentiator. So you'll see us, if you're looking at the slide, you'll see from kind of right to left. I think that makes it Hebrew, but we're starting with the open pit, average grade 1.2%. Then we move to the phase 1 of the underground, and that's a 10-year mine life at 2.6% copper. So that boost in grade has a material impact on our level of production and our operating costs per pound of copper. And then we have really the blue sky event in the Assaspar West. This is the 800-meter, 2,000 ton per day production shaft that was built and yet to be operated from. And we're looking at that as our third stage of growth. Yeah, and you can see what that looks like as far as pounds of copper, where we grow from, our fiscal year this year of around just under 4.5 million pounds of copper, to potentially over 60 million pounds when we get all three phases put together.
Yeah, Yeah, and for the viewers, in Atrium's target price in our model, we've modeled zero production for this fiscal year. Just providing Jed and the team at Trigon ample time to ramp this production into a commercial state and ultimately bringing those costs down. And just Jed, quickly, I'll touch on sort of where our valuation lies. I mentioned we have a 60 cent per share target price, but that's used on the back of our NPV for the project, which is about $180 million right now. We do think there's a lot of upside on that. We're conservatively using an 8% discount rate, which oftentimes is used for PEA stage projects, not one that is actively mining copper right now. And so as you sort of tick off these different milestones and de-risk the project, just like the press release this morning, where you're showing that mill is operational, we'll be looking to drop that discount rate, and ultimately, the NPV of our project or the project will be increasing. And then, like you said, the ACES Far West is a huge opportunity that isn't really considered in our model. And so when the different studies and economic studies come out for that area, I imagine this will be showing a lot of value for Trigon and its shareholders.
Absolutely. Like from my own experience as an analyst, there's always that boost that happens as you go from spending to producing, right? And just the nature of how we calculate NPV, right now you have an upfront cost that in your NPV for all that we are investing. As you roll into next year, that cost falls away, and you're just looking at the cash flow ahead of us, and target prices can go up, or at least I hope so.
Exactly. Yeah, well, with that, great overview. Congrats on the press release this morning. It's great news to see that, I guess, historical mill turned around and operational. And were there any other remarks you wanted to finish on?
Yeah, of course. We didn't touch on exploration, and for obvious reasons, what we're doing production-wise is front and center. But some of you'll notice a little bit of interesting background here. So I'm actually in Morocco right now as we get some work going on Silver Hill, and then we've actually had to hold back on some press releases because so much has been happening production-wise. But we've got a backlog of results at Combat, expanding that resource at surface. So look out for those news items over the next little while. Both exploration at Combat and here in Morocco at Silver Hill.
Great. Yeah, and over the last 6 months, the results coming out of Combat at surface, high grade copper, it's very impressive, and I'm sure there's more to come. And then of course some further upside out of Silver Hill. So with that, Jed, thanks for walking us through that today and the update. Looking forward to more good news throughout the back half of this year and into 2024. It's definitely an exciting time for Trigon, and yeah, we just look forward to following the story over the next several months. And then lastly, just for our followers, if you haven't seen our research on Trigon, can all be found on our website at atriumresearch.ca. Jed, thanks for your time.
Thanks, man.